Good morning. Let's see. Well, since I'm live now, but there we go. Good morning. Hi, I'm Mike Fouché from Grown In, and today we are starting our first panel, How Investors Approach New States Going Rec. I'm very pleased to have everyone here today. And just to start off with our wonderful sponsors, if I can pull up my list of wonderful sponsors. There we go. Our sponsors are accounting firm MGO. MGO provides industry-leading experience to help operators, regulators, and institutional investors navigate the complexities of the cannabis and hemp industries. Law firm Locke Lord. Locke Lord's Cannabis Group consists of skilled lawyers from a cross-disciplinary team that works on capital raising, licensing, compliance, and more. And Illinois Equity Staffing, cannabis and hemp industry training, payroll, recruiting, and human resources administration for companies that value diversity, equity, and inclusion. Thank you very much to our sponsors for helping make this possible today. And our panelists who are really making it possible today include Mark Cozy, CEO of 125. Did I say it correctly?
No, but that's okay.
All right.
125.
Okay, cinque, excuse me. Mark is a finance professional with over 30 years of experience as an entrepreneur, private equity investor, and investment banker. Mark is also managing partner of Lincoln Park Capital Group, a firm that provides capital and advisory services to early stage companies. And also Michael Lucas from Green Equity Collaborative. Michael is a 30-year capital markets and investment professional. He's the co-founder of Green Equity Collaborative, a minority-owned, woman-led impact investing platform, and serves as the chief fundraiser and investment strategist. Nick Gastovich, vice president of V. Gastovich Investments, a Chicago-based family office with decades of diversified investing and portfolio management experience, including core concentrations in real estate, private equity, and in angel investments. With his family, Nicholas was an early investor in the U.S. cannabis space back in 2014. Thank you all very much for joining us today. Excited to have you here. For our attendees, please take a look at our chat where Eric Davis, one of my partners, is going to be hanging out in the chat space. If you have any questions or comments, please go right there. Or if you just want to chat to each other, that's wonderful. And also we have a Q&A section that we'll probably be putting up a little later. But if you have questions, please post them to the chat. So let me start out with, and I'm going to throw this out to all three of you and whoever it is that start off. New York, Virginia, West Virginia, New Jersey, as well as Illinois, are all limited license states. How do you value a new business with a new license before you invest? How do you go through that process? How about you, Nick? You want to start off?
Sure. Yeah. So, like you said, currently the trend following the original cannabis markets all being out in the West Coast for the most part, and then seeing kind of the Midwest and East Coast evolution was this limited license format, and that was kind of the foundation of our investments back in 2014 here in Illinois. So I think the key factors we look at are what is the licensing landscape today? How many licenses are there in kind of the main categories, retail, cultivation, and processing? And then a big factor is what is the landscape going to look like, 1, 2, 3, 4 years from now? So you want a sense of, who this operator is, what licenses they have today, how they're going to compete against other operators, but then also how is the state changing and evolving over time? And then overarching all of that is what is the nature of the market we're looking at? Is it an early stage medical market? Is it a fairly mature medical market? Is it a soon to be adult use market? All those factors come into play as you analyze, hey, is this company's license, that's newly in development? How is that going to be valued in the market, and what is their competitive edge going forward?
Mark or Michael, do you have a comment?
Yeah, I would just echo that. Green Equity Collaborative sort of has a 3 or 4-legged stool that we use to evaluate markets. One is certainly the size, the demographics, stable to growing population. We like a strong regulatory environment, so that takes out a place like California, for example. We like a legislature, political landscape, and environment that is pro-cannabis. So, for example, I can throw out that we might have interest in Delaware, but the governor of Delaware has stressed on a couple of occasions that he really doesn't have any interest in adult use, for example. Texas, the second largest market by way of population in the country, has a THC cap, right, of 0.05%, making that market very unattractive. And what you have to know about Texas is that the legislature meets every other year. So it's not likely that anything is going to move quickly in Texas, right? So we love high regulation. We like the fact that regulators are involved monitoring the performance of a market, monitoring facilities. We love limited licensing. What Nick said, the cannabis business can be a great business if it's not ruined by loads of licenses being issued, right? Making the license itself valueless. So I think there's a fine line that states have to tread when looking at the industry. The goal is obviously to maximize taxes, but if you begin to minimize the opportunity for the actual entrepreneurs, the market will have a very bad the state will have a bad reputation.
Mark, how about you?
For sure. So we very much want states that are early to the game, that are legalizing adult use recreational cannabis, and we're looking for good people. So, for instance, I'm actually in New York right now, meeting with 3 potential partners with whom we'll apply for licenses and invest. We don't have good potential partners in New Jersey, so we'll be unlikely to invest there unless we find those partners. So it's really all about people who are smart and hardworking and trustworthy and so on.
Nick and Mark, the two of you, and Michael, before we kicked off, we were talking a little bit about New York State, and that we don't really know the rules, right? Because they haven't been written yet. The legislature created the Cannabis Control Board and then said, hey, guys, go figure it out. How do you begin to assess that market and what you do?
So it's, as you said, right, without the rules and regulations, it's a little bit of a puzzle, but nonetheless, our perspective is whatever the rules and regulations end up being, we can navigate around that and we can plan around that. And this is such a gigantic state. We can value whatever licenses accordingly. We're particularly interested in infusing and with a secondary interest in dispensary.
Nick, how do you assess New York?
Yeah, I mean, like Mark said, it's a bit of a waiting game to get the exact rules defined. But for now, we've gotten good hints as to what generally it'll look like. So we know there's 10 existing medical operators that are going to be grandfathered into the adult use program. They're going to have the advantage of being the only vertically integrated operators in the state. And they're also going to be allowed to open up 8 retail, which is more than anyone else can. 3 of those can be adult use co-located. So I think having exposure, just, most of these MSOs are kind of like the big public companies now. Having exposure that way is a good way to play the New York market. But in terms of the new licensing, I think like Mark said, New York is interesting just because the medical market today is tiny, almost non-existent, just based on how restrictive the rules have been. So the inflection to what the adult use market would look like with a population of that size is going to be huge. We saw something similar here in Illinois when it turned from a relatively small medical market to a very impressive adult use market. That inflection was huge, and we saw operators really capitalize it and just show crazy profitability. That's like a bit different than, like, say, compared to like in Arizona, it was almost in $1 billion medical market already. It's going to be a big adult use market, but that inflection from medical adult use isn't quite as dramatic. New York, we're going from an 120, 130 million medical market to potentially 3 to 4 billion quite quickly. So I think there's huge opportunity for any licensee.
Well, and let me ask you then about Illinois, because
let me just add one comment there. The only thing that and along with that, the social equity component of that licensure process has really not been worked out either, right? So we're very attracted by what can happen in states from that perspective. So that's along with all of the other comments makes sense for New York. Huge inflection, latent performance, very much like Illinois. That's the way we look at New York. Cost of New York related to New York are very important, particularly as it relates to social equity candidates. So we're going to look to see what happens there. But New York, obviously the biggest democracy in America, is very important to us as well.
So then let me ask you about Illinois. You have a pro-marijuana governor, a pro-marijuana state legislature, and you have 100 and some odd new licenses that are supposedly coming online this year for dispensaries, then another 40 or so craft grow. Somebody estimated to me that there's going to be about $1 billion capital demand in the next year or so in order to get, if all of these things were going to be able to get going. I've visited 3 different dispensaries in Illinois, or not dispensaries, cultivation sites in Illinois recently. They are all gearing up, doubling their space, tripling their space, preparing for this demand. How do you think about Illinois with all of its kind of regulatory snafus that it's had up to this point, and thinking about all of this capacity coming online at once as an investor? Any of you want to speak first?
Yeah, I'm happy to start. Being here in Chicago, definitely very familiar with the Illinois market. And, our first investment was with Green Thumb Industries back in 2014. So I really followed the evolution from its very beginning. And, since those initial licenses, kind of these new social equity licenses were announced, we've been contacting various groups and who have applied. And now we're all just playing this kind of waiting game. And what's become the unfortunate reality of new state licenses getting turned on, lawsuits are almost always going to follow. And we've seen that across the board: New Jersey, Illinois, almost every state that kind of issues these new licenses. So that's something that the legislature has to figure out. But the opportunity is there, no doubt. Like, the Illinois market has grown substantially since the start of 2020 when adult use turned on. And that is still with the limitation of there only being 110 retail licenses total. And
right now,
some of these stores are doing 20 million plus annually. So the opportunity for these new retail opportunities to get open is huge. And then concurrently, there's a good amount of the new existing medical operators are expanding, but there are some that are kind of the size of craft grows nowadays. So I think there's going to be a huge imbalance between supply and demand right off the bat. I think there's opportunity on the retail licenses getting issued, which hopefully are soon, as well as these craft grow and user licenses. So there's massive demand. It's just not being met right now.
So it's interesting, and Mike, you alluded to the potential $1 billion of capital needs for the new license awardees. So it's interesting, right? So my investor group has been interested in Illinois for over 3 years now, and some of the investors are getting cold feet about Illinois and the dysfunction that has occurred over the licensing process, and are frankly more interested in New York at this point. And these are Illinois residents, and very sophisticated investors. And so I'm really curious to see whether there's actually $1 billion of capital that is available to invest in all of these new license winners. I agree with Nick completely. This is still a wildly attractive market, but investors can take their capital and they can go to other states. So it'll be interesting.
So I have a dog in this race. You may or may not know, I was a part of the group that was the only winner of a minority only minority group or led group to win licenses in Illinois in the medicinal program in Illinois grown medicine. We, Green Equity Collaborative, we are a part of the original 21. And then the lawsuit started. The licensure process obviously has not worked the way we expected it to work out. We wish the state had chosen to adhere to the old rules and the old law to evaluate the licensure process, the validity of the licensure process after issuing a smaller number of licenses, take some time to evaluate the program, and then pursue the addition of new licenses as may have been warranted. We are taking another path now. One might think, I hear Mark, investors may get cold feet because they're thinking, hey, the state's just flooding the market with licenses, right? There is a possibility that when you have a ton of new licenses come to market, lots of the winners of those licenses will not survive, in which case the licensure process will have been a failure, right? So I think, again, we talk about states walking a fine line. One can only hope that in the administration of this process, as it relates to particularly the dispensaries, that you do take some time to stage the release of those licenses, evaluate the program, and issue new licenses accordingly in a stepwise fashion. So we know what they've said as it relates to releasing new licenses, but one can only hope as a business owner in this, hopefully, that the administration of that process is executed in a more business-like manner, right? That is friendly to awardees and friendly to the interests of the state.
Okay, well, that's
a lot.
That's a super positive thing to say there.
Well, so listen, we look at this. I look at this in terms of just pure numbers, right? 12 million residents of the state. You've got a certain number of dispensaries out there. Let's talk about it. We're talking about issuing about 300 licenses at the end of the day, 200-300 licenses. I think there's something on the order of about 7,000 or 8,000, 9,000 liquor stores. That's what cannabis taxes have been compared to over the course of the last 2 months, right? 9,700 liquor stores, 1,328 liquor stores in the state, right? 9,700 people per liquor store. So if you're talking about issuing lots of cannabis licenses, you got to look at the number of people per license. You got to apply use rates. Illinois is 16-17% use rates of cannabis. I don't know if we can support it, right? It's kind of simple math to me. DC leads the way at almost 30% use rate as it relates to the population, 27, 28% use rates. If Illinois can get use rates up, well, then maybe all of these new licensees can be supported. But the state will not get the taxes they expect, right, if use rates don't rise. And while people are waiting for use rates to rise, you may have problems running a business, right? It's just, you have to kind of line these things up when contemplating where you invest. So I agree with Mark. People do have choices now. This isn't 8 years ago when you're talking about deploying capital. 8 years ago, cannabis was coming. People were just, woo, I'm excited. Let me just get involved, right? Now investors can be far more discriminating, and they're looking at how laws are made, right? Whether or not they are more friendly to the state's interest, or if they're just as friendly to my interest as an investor.
Okay, Michael, I want to put a pin in that use rate question because I think that's very interesting. But I want to ask you first, and then I'd like to get the rest of you to answer the question of, if you are now being discriminating, what are the characteristics that you look for in a potential investment, in a team that you would be investing in? What are the signals and the red flags?
Well, for me, it's that you understand markets, right? So let's go going top down, right? I want to understand that you understand use rates. I want to understand that you understand real estate location, the benefits of the law as it relates to real estate, how you pick and choose vendors. I need you need partners who are going to be ingenious in their ingenuity. We've been through the phase where people come to the table and spend loads of money and end up with loads of losses, right? If you cannot create a business that really creates real value and pretty quickly, you're going to be out of business pretty quickly, because the market is becoming increasingly more competitive, right? And that's what happens in markets. They become more competitive. So you need to have people that you're investing in. You're betting on the horses. You need to have people that you're investing in that understand competition, understand how to run, that the goal is to achieve profitability as quickly as possible, and that they are guided by numbers, not anything else.
Mm-hmm.
So I agree with Michael completely. And I would add, if the potential partners don't have that experience and expertise, that they're willing to learn and willing to be coached and willing to be a real partner. And so, so I would add that to Michael's list.
Nick?
Yeah, I agree with both these guys. And to add on, I think one of the biggest differentiators for us, and looking back at the past several years, is just how capital intensive this industry is. So access to capital is a huge important factor in seeing that the existing company has, like, if they're completing a raise or what have you, has a lead investor or a substantial amount, just because of it really is. It takes a ton of money to get, especially on the cultivation and processing side, to be competitive with the other companies out there who are well capitalized. I think that's a huge differentiating factor. And then, like these guys said, it's all about experience, and that experience is both on the capital allocation side, just in terms of where our dollars are best spent, where's the top of our ROI that we can obtain, but then also just experience on the growing side. Assuming that's what license you're targeting, it's very difficult, from what I've seen, to grow good cannabis at scale and to make differentiated brands, especially as markets become more competitive over time. So I think having the combination of good experience and then good access to capital are probably the key things we look for.
I want to just point out again to folks who are watching this, please go to the chat and put in any questions that you might have for the panelists. I want to ask the three of you, what is the whole point of an investment is that you're going to get a return, right? And so there's some expectation that there's going to be an exit for you. What are the exits that you imagine? That the dispensary is sold to another organization, or that you're bought out? How do those things work, and what is the typical peer hold period that you have before you have an exit? Mark, do you want to start with that one?
Sure. In a typical VC investment, we look for a 5-year hold period, maybe a little bit longer. I think in this case, we hope it's longer. We are social equity investors, and we hope that our partners want to hang in there longer and really build wealth and build a business. And so I would add to that, and a potential exit might not be a sale to another entity. It might be the partner buying us out. That the business does so well 6, 7, 8, 10 years down the road, that the business partner buys us out. I mean, that would be a huge win, and I think that would be a very positive outcome.
Michael?
Yeah, I'm going to echo Mark. We are focused on social equity investment as well. We are also opportunistic, though. But I would simply say that at this point, that is the perfect exit. I love what Mark just said. It's the perfect exit that your social equity participant and partner is able to just take you out, right? I mean, that's obviously the reason that we're in it. We're Black people. We're female-led. We are in this because of what cannabis has done largely to our communities and our brethren's communities, right? The war on drugs has devastated many of our communities. So the way that we look at this is a way to help. I look at this purely as a way to restore, right? Restore community, restore the people in those communities, restore life through something that was so punitive to many of my people. So for me, we exited out of our IGM holdings after 4 years, 5 years of holding them. Forefront Ventures purchased our assets, 85th Commercial, the Mission Dispensary, and then the grow in the Western Burbs. We didn't have that as a plan. We were able to secure a price that we thought was appropriate, given the shape of those assets and the time in Illinois. I think we, from Nick's perspective, the word inflection, right? We missed that in Illinois. Illinois had a terrible start because there were not enough maladies assigned to the medicinal program, right? But the notion of exiting out of this approach, the social equity approach, the way I think of it is, lots of people try to sell businesses. It's better to have somebody come and buy your business, right? As it relates to getting the best price and best value. So when we talk to entrepreneurs and our partners, we talked to an investor yesterday. When are you exiting? What's your plan for exit? I said, I don't know that we have one. We're looking to be long-term holders and wealth creators. That's what we're looking to do. Right. If somebody comes and gives us an offer we cannot refuse, then that's the discussion the partners will have.
Nick, how about you?
Yeah, I would say the exit timeline varies quite a bit depending on the investment itself. If you're looking at looking back at 2014 when we started investing in the Illinois side, the original 21 holders, it was very much a longer term investment just because the exit was unclear at that point. Like there was no public markets for cannabis companies. There's not a ton of M&A back then. So back then we were kind of investing in, what cannabis could become. We saw what the future would look like and we believed in that. Nowadays, I think it just varies a lot more investment by investments. I think in the past year or two, we've made several investments into kind of larger, more mature private MSOs who have some scale. And now the CSE offers a tremendous opportunity for these companies to go public in a short timeline. So we're not necessarily exiting as soon as these companies go public, but having that avenue to an exit has been a huge opportunity for us, just in terms of trimming our position or what have you. But if it's a newer market, say they're just awarding licenses for the first time, like George is about to issue licenses, for example, and we're supporting a social equity applicant there. That's going to be a long-term hold because we recognize that, hey, we're not going to demand that you guys sell your business in 2 years. Like that market's going to take years to develop. So I would say our exits are very determined by the company itself and where they are in a specific market. I do think it's important in general, though, for a company to at least be aware of where the company is going. Like I think they should, even if there's no specific exit plan, they should be able to articulate what's this company going to look like in 5 years. So I think if we can appreciate that, that's definitely helpful for longer term investments.
So back to Illinois. I'm not sure that we came to the conclusion that there won't be enough capital for everyone that wants it. But it seems that is a vibe. I don't know what else to call it. And Cole Preston asked the question, do you think there will be a sell-off once licenses are awarded in Illinois as a result of lack in capital? Michael, you want to answer this one as somebody who had one of the early licenses?
Yes, there will be a sell-off.
And so, Michael, I have a question for you. What do you think the going rate will be for a license in Illinois?
That's a tough one, right? Because everybody's sort of very much like a generalized startup with nothing on the books in California. You go, well, my business is worth $2 million, right? That used to be kind of what a license was worth too. You got it. Maybe it was $1 million to $2 million, right? The piece of paper. With 180 coming to market or whatever, I have no idea now. It's back to recalibrating the numbers again, right? Mm-hmm. But yes, I absolutely believe there will be a sell-off. I do not believe that, of the 180, 200, 220, whatever this number is, everybody's not going to be able to secure capital, right? We know that, right? If this is about social equity, the facts remain as Nick and we all know in this space, this is a capital intensive business. If you're going to stand up a dispensary, and it's going to be of any kind of quality, 2,500 square feet of floor space, counting rooms, few offices. It's $1.5 million to stand that thing up, right? You got to have reinforced walls, ceilings, something equivalent with a safe, 7-foot thick walls, whatever it is, so people can't drive trucks through it. It's just simple math. Let's go back to math again, right?
Mm-hmm.
I used to live in England. They called it maths in England, right? Let's go back to maths. Everybody's not going to have that money to stand those dispensaries up. So yes, there will be a sell-off. I would expect to see licenses being sold as soon as people get them once they find difficulty securing capital.
Yeah, I agree completely.
Yeah, and I would add that especially with these Illinois licenses, a lot of them were tied. You had to like tie your license to a specific real estate entity. So a lot of these applicants, because of how delayed the process has been, has had to hold those real estate assets and pay for them this entire time. So what was the capital base they had, at the start of 2020 when they were expecting licenses to be awarded in May 2020, now a year and a half later, a lot of them, like Mark alluded to earlier, have gone to other states. I know we talked to a bunch that gave up on their Illinois plans to go to Michigan because Michigan's super easy to get open in. So I think, like they're saying, it's going to be a challenge for certain operators who have just been sitting on, and paying for just the fees and everything associated with holding real estate for that long. And then I think the other big factor is there's going to be buyers. I think there's a lot of MSOs out there who don't have. You can have a max of 10 licenses in the states who aren't at those limits right now. I know a bunch of them are that I've talked to are waiting for those licenses to be awarded and are going to go after them. I mean, we've seen how much companies like Parallel, Terra, 6 licenses recently. Ascend has bought a bunch. Some of them are going for 15 to 20 million per retail license. That obviously drops quite a bit when there's 180 new ones. But I think a lot of the MSOs, the Jushis, the AYRs of the world, will look to add to their existing footprints in the state or enter Illinois for the first time and will be buyers of those licenses because they have the capital to bring them online.
So the reality then, Nick, is that this will be contra to what the lawsuits and all of this activity intended, right? The social equity applicants will ultimately not be successful, many of them, in securing the capital required. And then the MSOs will come in and sweep through and take many of the licenses off their hands and have an even more, have a stronger position in this market, right? Mm-hmm. So it's unintended side effect, and I think you're going to be right.
So, but does this mean that a state like Illinois that has a big glut of licenses, does it become like Oregon, where there's just this massive glut and the market kind of crashes, or Michigan, which has I think it has about 400 some odd dispensaries in the state and still growing, still functioning.
Yeah. So we're a bigger state. That's the first thing. 6th largest state. Michigan right next door is the 10th largest state by way of population. We have Michigan's 110, $120 million, 120 million person tourism business. We're somewhere around that same sort of number in Illinois. We're different than Oregon, right? In some respects. But when you talk about issuance of licenses anywhere, I don't care what you're doing, if there's a glut of it, you're going to have problems with the rate of absorption, right? That doesn't matter if it's treasury bonds or stock or anything, right? If there's too much of it issued at one time, you're going to have problems and prices will fall. That's just laws of supply and demand.
I want to ask you guys, all three of you, I want you to weigh in on this. Kevin Taylor asks a question about how will you deploy capital once we have interstate commerce? But I want to ask the question that comes before that, which is, do you even imagine that there's going to be some sort of interstate commerce allowed, that Congress will act to allow cannabis to go across state lines anytime in the foreseeable future?
So one of my investors asked this question last week, and our perspective is we do not think interstate commerce will happen anytime within the next 5 years, maybe 7 years, maybe 10 years. If you look at alcohol coming out of prohibition, and it took decades for that to occur. Now what's happening, but yeah, we do not worry about interstate commerce at all.
I'm right there with Mark. Right, we couldn't even deploy masks around the country,
Yes.
all at once. I mean, PPE. I mean, come on, seriously. The first thing is that none of the states work alike, right? So who's going to administer to? Is the federal government going to do that? Who's going to track these sales? Who's going to know who's buying what? Are we going to maintain the same limitations, purchase limitations on a per customer basis per week or per month? How's the whole thing going to be administered? There's no framework for that at the federal level, and all of the states are quite different right now. So I'm just like Mark. Would you say 5 years, or did you say 10 years?
No sooner than 5 years. I can't imagine it happening in the next 5 years. Not even maybe in the next 10 years.
I'm right there with you.
Yeah, I agree with these guys. I think, eventually, the interstate commerce clause will come into, effect. And I think it'll probably get eventually issued probably by a lawsuit that goes to the Supreme Court, honestly. But that's so long. I think it's just so many years away. I mean, we look at how difficult it's been for Schumer to get anything even passed, even something simple like the Safe Banking Act.
Mm-hmm.
He created all this kind of hoopla saying hey, I'm bringing something quick. And I think he quickly realized, number one, he doesn't have the votes with it, even in the Democratic Party, because there's several Democratic senators who have said they're, not looking to support federal legalization. But then trying to find a bill that can work and get Republican support, that's even harder. And to get potentially 60 votes in the Senate to avoid filibuster, it seems, near impossible. So it's hard to imagine a scenario where you're going to have legislatures from state markets that just created huge programs to incentivize local jobs, opportunities for social equity applicants, and then say, hey, let's create a bill that opens up the entire country and all the weed's going to come from the West Coast. I mean, like in Illinois, those craft grows would have no value at all in an interstate country. Just because they're never going to be able to compete on price. So it's hard to imagine how state senators can justify it to their constituents, like, hey, I'm going to support a bill that opens up the country. Even though, most industries work like that, the nature behind how cannabis has evolved in the U.S., the state-by-state approach, just creates so many limitations and just issues with, trying to create a federally, unified system.
So then let's talk about something similar, but slightly different, which is banking. There's been a certain amount of talk that, maybe you could deschedule cannabis administratively so that you don't have to go through Congress, and that would allow banks to no longer, large banks to be able to say, okay, this is not federally prohibited. We can start lending, and then maybe institutional investors would get involved. And all of a sudden BlackRock is buying cannabis cultivation facilities. What do you guys think about that as something, and do you imagine a timeline for that?
So I think so I've spent a lot of time in my career hanging around the institutional capital rim, so to speak, and I don't think that institutional investors will invest in cannabis until it's federally legal from a banking standpoint. So I think that administratively, any sort of administrative action, I can't imagine would get institutions comfortable. But that's my perspective. I really do think that something like the Safe Banking Act would have to pass, and then there would have to be a number of years for that to kind of set in and take shape before you have BlackRock or Fidelity investing in the space.
Echo that sentiment wholeheartedly. The Safe Banking Act is the first leg in moving this thing forward. Why we are involved in a cash business, I have no idea. We are now we are in the country where there are more laws pro-cannabis state by state than there are anti-cannabis, right? And let's throw hemp in there too, right? So we should have a safe banking law in place ASAP. It's ridiculous that the federal government, the state governments are collecting taxes, and you can't even operate the business off of which the states prosper without them being safe, right? In terms of handling cash. So to me, it's absurd that this hasn't happened. It's absurd that there's been no movement on this issue for more than 2 years. This should just be part of what is normalized in the country.
Okay, Nick.
Yeah, I agree with these guys, and this is something that we've dealt as investors for a long time now. Just in terms of we've been kind of kicked out of a number of federal licensed banks because they realized we were cannabis investors. Like the only groups we can work with are state chartered banks who are openly working with cannabis businesses. Mm-hmm. It creates huge hindrances to the market in general, and just the opportunity. I'd say post-election, you can just tell by the amount of capital that some of these large MSOs have been raising. There are new institutions getting involved, more institutional capital getting incorporated. And I know a number of kind of first-time entrants into the space participated in some of those, 100 million plus equity and debt deals. So I think, the election definitely changed things to some extent. But like these guys said, you need that federal legislation, at least safe banking, to get the compliance departments for these federal banks and for like the New York Stock Exchange and all the major listings. Like they need to get comfortable on an actual federal legislative basis. I think certain private equity funds, have a bit more flexibility in their compliance departments to get comfortable with it. And that has picked up, but it's it's going to remain limited for a while now, until something changes.
Okay, I want to shift back from a big global perspective to something a little more focused. Is there a type of cannabis business that you find more attractive, whether it's dispensary? Mark, you said infusers, you're looking at in New York. Cultivators, delivery, transport. Does anybody invest in testing? I don't know. What are your thoughts on that, each of you? Mark, since you talked about infusers, can you talk about why infusers are interesting to you?
For sure. We're very much interested in building brands and brands that are defensible. So our goal on the infusing side is to create an edibles brand that is very CPG focused, kind of the RX bar of edibles, and where you have quality and consistency. So we think there's a need for that in the edible space. And on the dispensary side, I think we're very much in the early stages of a dispensary retail experience. And so we want to, there again, build something that is a national brand, that is a really identifiable brand and experience. We're not interested in cultivation at all. My markets background leads me to believe that someday, and I don't know when, I'm not smart enough to figure it out, that this will be a commodity. And so the investment is gigantic in cultivation. We don't have that expertise. And so we wouldn't invest in cultivation.
I'm going to have to stop going after Mark because we're saying that, Mark, you're going to need to let me go first the next time.
Okay.
We are interested in brands, CBG, CBN, THCV. All right. We want to be able to elevate the experience for users, create highly differentiated product. Again, on point with what we think as it relates to cultivation. It will be a commodity. It will be a crop that will be sold by the bushel or whatever else, like corn, wheat, soybeans. It is what you will do with it afterwards, right? When we first got in this 7, 8 years ago, I just said, look, I can see people like GW Pharma contracting with grow fields around the world if they can get Epidiolex FDA approved. It is approved, right? Logical products to be approved, and there's greater distribution of these products. I think that's literally what's going to happen. They're going to be big grow factories. Here's our recipe, grow it like this, and ship over here when you're done, right? Pay X for it. It will just be contract grows. But for the time being, we completely and wholeheartedly agree that there needs to be a brand differentiation, be able to create affinity groups and buyers who believe or are purchasing unique experiences. And oh, by the way, your best margin can be achieved through that means, right? So that's
Nick?
where we are. Experience.
Yeah, no, I agree with both these guys, and I'd add the caveat that I think when we look at license types and what we're interested in, it varies significantly market to market, because I think if you look at a market like Nevada, you definitely, the retail licenses are super valuable. There's like 60 nowadays. I think they're going to like just over 100, and there's like several hundred grow and processing licenses, and the wholesale market is a bit tougher. And you can even look at a company like Planet 13, just pure retail, does phenomenally great margins, has done extremely well, or just like a pure grower in Nevada, like Flower One, who has struggled quite a bit. So like it definitely is market dependent. Some markets there's just one license and it's completely vertical, so you don't really have a choice. Like Florida, for example, you can only get a vertical license where you're required to do growing, processing, and retailing. So I would say like that's kind of a factor in the current team. I agree with these guys. I think longer term, the grow aspect of it and all the kind of inputs are definitely commoditized over time. So we look at the full gambit. I'd say, I think we can appreciate that, indoor grows will have, could potentially survive if they're really good at it. In a market that's commoditized, because even like California, you can get a $25 eighth, but there's still like cookies selling for $70 an eighth. So like they said, if you have a good brand, a defensible brand, you can still get good margin on a product that is kind of commoditized otherwise. Yeah, like these guys said, I think creating a defensible brand is important across the board. But then with the caveat of when you're looking at a specific market, look at the licensing landscape of the entire market and see which kind of license has the potential to have value.
Okay, so I'm going to do our last question, and it's basically words of wisdom from you, because you are all so wise. So I want to ask.
The guy's calling us old, I think is what he's saying.
No. You're so young, Michael.
Oh, okay.
Nick, I'm going to ask you, and I'm going to ask everybody else this question. When investors come to you, or not investors, somebody seeking investment comes to you, what is the one thing that you consistently wish that they were ready with and that they had in hand when they come to talk to you?
I think number one thing we look for is just a well-organized data room with, full kind of financials, investor deck, all the materials, licenses, everything that we can review as part of our due diligence process. I mean, that's kind of just step one in how we get to know the company. So if a company isn't organized in that fashion, it kind of shows you where they are in terms of the capital raising process. And then I would just say, a very articulated plan as to what their differentiating factors are to the company, and being able to, kind of justify where, the projections that they're aiming to achieve match up with the general landscape. Now, because I think, we looked at a million Michigan companies, for example. We see a lot of them. And I think if you looked at 10 of them, their projections from just those 10 would be like 90% of the projected market in like 2 years. So that math doesn't add up a lot of the time, and we push back on them saying like, how are you guys going to achieve these numbers when that's 200% greater than your competitors? So if they can't articulate why their business plan is able to achieve these, these outsized margins or market share or what have you, then it's hard for us to justify an investment like that. So I think a realistic business plan and a well-organized data room and just an articulate executive team that can really speak to what their focus and differentiating factors are going to be.
And this is a new term for me. A data room is either a Dropbox or a Google Drive that has all your documents in one space. You can send somebody a link and boom, they can look at everything right there in one spot. Michael, you're going to go before Mark this time.
About that. But unfortunately, I'm going to say the same thing Nick said, maths. So we're back to the same thing again. You cannot, look, when we send out things to investors, it includes exactly what Nick said, right? A presentation deck, what we're doing, our backgrounds. That should show that there's some sort of savvy or seasoning as it relates to maybe this market, or even that you are an entrepreneur and understand the entrepreneurial process, right? The data room will reveal that you are a studied entrepreneur, right? Because it will speak to your research. It will have all of the data in there from, let's pick a state, the state of Michigan. It will show you every grow in the state. It will show you every grow that is to come on stream this year and next year. It would show you our plans, and it would have important math, right? And models and pro formas and all of those things in the data room. So if you are not studied, if you do not understand the landscape, it makes it very difficult to be able to invest in anyone or with someone in those marketplaces.
Okay.
So Michael and I have agreed on everything, including this last comment, and Nick, of course, as well. I would add that
I'm talking to you afterwards, by the way. We're becoming friends, Mark. Whether you know or not.
This is going to be a nice relationship.
Do you want to spend? Yeah. Where are we going to spend Thanksgiving this year?
I know, that's a good question. We got to work on that.
So I would add to all of this. I think a lot of potentially licensed winners will not have data rooms and will not have PowerPoint presentations and financial models. And so I would say an understanding of knowing what someone doesn't know, and having a realism about that, and willing to have someone help them build a business in a partnership. And so that's what I add to what Nick and Michael said.
Right. I want to thank the three of you very, very much for joining me today. Mark Cozy, CEO of 125. Did I get it?
Better, yes.
Okay, better. Michael Lucas from Green Equity Collaborative and Nick Gastovich of the Gastovich Investments. And I also want to thank our sponsors, accounting firm MGO. MGO provides industry-leading experience to help operators, regulators, and institutional investors navigate the complexities of the cannabis and hemp industries. Law firm Locke Lord. Locke Lord's Cannabis Group consists of skilled lawyers from a cross-disciplinary team that works on capital raising, licensing, compliance, and more. And Illinois Equity Staffing, cannabis and hemp industry training, payroll, recruiting, and human resources administration for companies that value diversity, equity, and inclusion. Thank you all very much. We've got another panel coming up in about 7 minutes. Hope you'll be there. Thank you, gentlemen.
Thank you. Thank you for having me. Bye-bye.